Visa Inc., ticker symbol V, is currently trading at $336.74 a share. If we go over the last year, you can see that the stock is up about 24%, and over the last 5 years, up around about 98%. If we were to compare the SPY over the similar time, it's beating the market in the 5 years, beating the market in the 1 year, and obviously beating it in the year to date as well, as it is up and the market is down. What I'm going to be doing today is looking at Visa and then taking it to my automated stock valuation spreadsheet to see if it's a buy or sell using the discounted free cash flow model, comparable company model, dividend discount model, and Ben Graham formula for intrinsic value. So let's put in the ticker V, and this will load up all the latest company financial data so we can have a deeper dive. If you're interested, check my Patreon. It's the $4 tier. This gives you access to the sheet so you can do your own reviews. Anyway, $336 a share. 657 billion market cap, a PE ratio of just under 34, which is higher than the market average, which is at just below 27. Earnings per share $9.92 and a beta of 0.94, meaning it is less volatile than the market. And let's have it as a buy, $375 a share. It does pay a dividend, 0.71%, meaning you'll get $2.39 per share. And it is a safe dividend, 4.1 billion, and that's about 20% of the net income and free cash flow. By before the 11th of May if you want to get paid your dividend. So revenue, all-time highs, 36.80 billion. And if we look at the most recent earnings, you can see here we have the net revenue on the quarter at 9.5 billion, up 10%, which is obviously pretty what you want to see. Also, we have the business drivers here: payment volume, cross-border volume, excluding inter-unit, cross-border volume total, and processed transactions, all up 9, 11, and 16%. And then if we scroll down here, we have the revenue, as I said before, 9.5 billion. And in terms of that, service revenue up 8% to 4.2, data processing revenue up to 4.7, international up quite high, 14%, 3.4, and other revenues 912 million, up 32%. So everything is up for Visa, looking pretty promising. Net income, are they able to generate more profit? And yes, they are all-time highs, just shy of $20 billion. Free cash flow, most free cash flow they ever had, 20.4. If you look at operating cash flow versus capex, capex is increasing ever so slightly, but operating cash flow is at all-time highs. That's why the free cash flow is so high. Shares outstanding, they're buying back shares, they're rewarding shareholders, they're doing everything right so far. So let's have a look at the discounted free cash flow model. This is a way of valuing stocks, looking at the future free cash flows and discounting today's value. We'll have a look at just the averages here to see what it is saying. And we will do this, and we will do this. So $280 a share. Now let's see if we disagree with those numbers. Firstly, I'll just quickly update these. This is the net income margins. I think they're increasing those. We'll even do 55%, brings you to 291. We're expecting 39 and 43 billion in the coming years. Let's see what analysts are saying. Yeah, we're about where we're at. Yep. So we'll increase this just a smidge to 8%. Brings us to 292. Net income to free cash flow net income. I'd say that's about fair. So yeah, puts about $300 a share. Free cash flow ratio is a little bit high, but as you can see, generating stable free cash flows. And it's trading a bit of a premium. Dividend discount model. Let's have a look here. I mean, we're gonna have to increase the discount rate a lot a bit here. And then we can't do that. So we can do 11. I mean, to be fair, it does look like it is. We'll do 12.5, 12. I mean, they are, if at 13% you can see it's a massive buy. At 12% it's not, but they're increasing at a very, very high rate, over 13% in recent years. So that does look pretty promising as well. Ben Graham for formula for intrinsic value. Let's see what Visa is in terms of growth. 12.83%. Puts it at $200 a share, less than $200 a share. So dividend discount model likes it. Ben Graham, not so much. Discounted free cash flow has it slightly overvalued. So finally, we'll do the comparable company model. I think the most obvious one to compare it to is, of course, MA, which is MasterCard. And then we'll do PayPal. And we'll do, can we do Block, Square? I mean, we'll compare specifically to MasterCard at the end to see which one is the better value. Is Block not? Block share price. XYZ. Okay. So in terms of enterprise value, this is Google. I mean, it's not actually Google, it's all the other information, but it's just highlighting Google there. So enterprise value, Visa is the largest, then MasterCard, then PayPal and Block. Revenue growth rate, it is the smallest revenue growth rates. 1 year though, high, quite high. EBITDA the highest, net income, biggest margins by quite a bit. Price to sales, it's one of the highest ones. Price to book, it's higher. PEG, ideally one that's under 1. EV to revenue, one of the highest. EV to EBITDA highest. PE highest. And forward PE highest. So it puts it at $212 a share compared to all of them. But if we were to compare MasterCard specifically, you can see here puts it $326 a share. So it might be worth looking at MasterCard just to have a compare here. But you can see it is, in terms of revenue, growing slightly less, but much higher margins. EV to revenue higher, EV to EBITDA lower, and PE lower as well. These two will make it a buy, but the EV to revenue brings it down. So in terms of PE, it is slightly less or slightly more undervalued than MasterCard, and even on the forward PE as well. So if we just compare, we'll go back to Google if we can. Nope, wanted to compare. Oh, it did do it. Yeah, so year to date, Visa up about 7%, MasterCard down by 1%. Over the last year, Visa up 25%, MasterCard only up 13%. And over the last 5 years, they're pretty much neck and neck. So I will do another video on MasterCard just to compare it, and we can see. But yeah, we're looking at the actual sort of fundamentals of Visa. Stable free cash flow growth, buying back shares, net income, increasing, the margins are increasing, and steadily increasing their revenue. Right guys, thanks for watching. Please give a like on the video if you enjoy it, subscribe if you're not already, and check my Patreon. I'll just talk about that a little bit now. $4 tier, which gives you full access to the sheet, and then you can do your own stock reviews and analysis as much as your heart content. If you want to buy the $7 tier, which is the increased value, you can do that as well. Or if you just want to help me out for $1.50 a month, that would be much appreciated. But I would much prefer it if you are using the sheet and getting value from it that way. I do think my sheet is good, especially on the comparable company side, and it's all automated, which is good. It's a lot quicker than clicking things around on Yahoo Finance, and especially doing the compares. Right guys, sorry for rambling. I will subscribe if you're not already, give me a like, all that fun stuff, and I'll catch you guys next time.